Test, test, 1, 2, 1, 2. What's going on, guys? It's Ricky with TechBet Solutions. I hope that you guys are all having a great start to your Wednesday. Today is February 12th. We have that CPI data report in the next 4 minutes that's about to be released. So I wanted to come on here and simply go live. So we'll talk about a few things of what you should know before any report like this is released, where you can find it, just so you don't have to depend on someone to understand what exactly is going on. So first off, it's an inflation report that is released on a monthly basis, and it's released on the website of bls.gov/CPI. The CPI report pretty much tracks on the consumer side if inflation is going up or down. Once the report comes out, so in the next 4 minutes, you will see that it no longer will say December, it will say January, and depending if items rose or dropped, we'll determine that. And then we click on it, and when we click on it, we can click on like the PDF. Again, this will update to the latest filing, and then we'll have the new month of January being added, and then the old month of January being removed. And then we'll get right into it. So this is the actual report itself. It might look a little overwhelming if you're a little bit newer, but trust me, when we break it down within this video, you're going to have a full understanding of how it all works. So the current market's expectation for the report is 2.9% versus the previous of 2.9%. So we expect no change in the month of January, or I would say a no change in the overall rate of inflation. For the month of January, we expect a 0.3% increase, and for core CPI, we expect a drop from 3.2 to 3.1. So that's an increase of 0.3% with core inflation. So that makes sense? Are we shorting? No, we're waiting for the market to react. So there won't be any trading within this live session. I'm going to save that for our LPP live trading session. So if you want to watch me trade live as soon as the market opens today and every day moving forward, it's a one-time payment, lifetime access. It's going to be that second link in the description down below. It's LPP, and they get to watch me trade live every day. So I actually have to share this link very quickly with the people on Instagram. All right. What do you guys think? We're going to pop or are we going to drop? So with markets, CPI live. All right. With markets pretty much at 530 for QQQ, which is a common resistance range, we'll see if we end up exceeding expectation and continuing to push up, right? So what I'm talking about is there's been this common pattern of getting rejected at 530. So common resistance range, and we get rejected back down to 500, right? Get rejected back down to 500, 500, 500. So we'll see what happens today. So this is going to be in the next few seconds. Again, hope that I earned your thumbs up. Please consider subscribing. And if it's not too much to ask, feel free to partake in that live chat. Here we go. Any second now. Ready? Big dump. Oh, wow. Oh, wow. Oh, wow. Holy smokes. Wait, this is a significant drop for NASDAQ. Inflation for core was expected to be 3.1. We came in at 3.3, higher than what was expected, much higher. Overall CPI, 2.9 was expected. We came in at 3%, a little bit higher than what was expected. Look at that. NASDAQ market with a oh man, we might have to trade this. Is this a dip by opportunity? Whoa. Let's get a round of applause. A round of applause. If you guys are happy that the market's dropping, drop a thumbs up. Make sure you smash that like button. Holy smokes. NASDAQ market is down 1%. This is a significant drop. If NASDAQ market is down 1%, that means that SQQQ is up nearly 3%. Look at that, 2.7%. Huge gap up. Now, does it mean that it has to hold up there? Definitely not, right? We have this saying within our LPP group, make that money and bounce, especially if you see lack of progress or the potential risk of the markets recovering and then you giving back your profits. You don't have to, right? At the end of the day, you're able to do exactly what you want to do because you're an adult, right? But if you wanted to play it safe, you're able to lock in profits. For those that don't know how to lock in profits during extended hours, you click sell. You have to use a limit order and make sure that you turn on your extended hours so you're able to trade during those extended hours, okay? Holy smokes. How's Tesla? Is Tesla still getting smoked? Tesla was up, a significant drop there. All right, do you guys want me to break down the CPI report step by step? You guys want me to break down? Yeah, all items rose 0.5%. What do you guys think? There it goes. NASDAQ market is still dropping. Do you guys want me to break down the report? Yeah. All right. We only have 100 likes. Come on. You guys have to give me at least 400. 400 likes. That's not too much to ask. 400 likes and we'll break down the report. What do you guys say? Look at that. Beautiful sell-off. Beautiful sell-off. Palantir stock down. Oh my goodness. Look at this. This thing's free falling. It's not free falling. It's still showing signs of a continuous descending pattern. Wow. Look at that, right? We're still testing that major support range of 520 per share. If we break below that, this was a common support range 2 to 3 days ago. If we break below that, a big gap down to the lows of 500, right? Just like we talked about, patterns tend to repeat themselves. They don't always have to. Common resistance range, common support range. Technicals have nothing to do with what was just announced, though. That was all a fundamental reaction to, hey, inflation came in higher than what was expected. That's the reason the market is reacting the way that it is. So we can break it down, though, very quickly. Let's do it. All right, drop a thumbs up. Make sure you subscribe to the channel, and let's get right to it. Ready? So first off, where do you find this report? Again, this is for those that are just tuning on in for the first time. I just want to make sure you guys have a full understanding on how to be able to do this without me in the future, right? Obviously, I would love for you guys to continue to watch our videos, but at the end of the day, I don't want you to have to depend on me, okay? With that being said, this website is called bls.gov/CPI. So you might want to save this website if you can't remember that. There's a CPI report and a PPI report. This is Consumer Price Index, which is inflation on the consumer side. The PPI is Producer Price Index. So that's inflation on the production side of things. It is known that production is obviously not as popular as consumer because people care more of what's happening to the consumer. But for people like you and I, it is known that whatever gets passed down or whatever is experienced by the producer is often passed down to the consumer. So if we see that PPI is starting to increase while CPI is still low, then it is, again, a way that we can foreshadow or forecast that, hey, that inflation that's increasing or hitting producers will most likely get passed down to consumers, right? Because that's where the inflation normally gets passed down to. So now that we talked about that, let's go ahead and get right into it, right? All I do is I refresh the screen and then I click on the PDF version. I prefer the PDF version other than anything else. So what this is telling me is that CPI, all items. Oh, look at that. I just got an alert that Bitcoin is dropping. My bad, Ricky. Stay focused. All right. I have like ADHD this morning. It says all items for the Consumer Price Index report increased by 0.4% on seasonal adjustment in the month of December. Oh, wait. This is the wrong one. There we go. My bad. Here we go. Yeah, because it should have been a 0.5% increase. So all urban consumers increased by 0.5% increase on seasonal adjustment on January, rising after a 0.4% increase in December. So I want to humanize this for you, right? Because I want you to be able to explain this to a buddy. So the way that I want you to understand this is that, remember, this is an inflation report that is tracked on a monthly basis. So if your buddy just, you guys are shooting the shit and he's like, dude, did you see that markets dropped randomly 1 hour before the market opened? What's up with that? You would be like, oh yeah, there's a CPI data report that was released. Well, what is that? Well, it tracks if inflation is going up or down. Oh, okay. Well, how did the report come out? Well, for the month of January, right, from the month of December to January, so what we tracked and reported on the month of January, it saw an increase of 0.5%, which was just a little bit more than what we were expecting. So inflation is going up more than what we were expecting according to our forecast previously. Like, okay, so what exactly does that mean? Well, again, we'll get into that, right? But this is how you can kind of humanize it, right? Now, the index of shelter, I don't really care about that. The index of all items less food and energy, this is core CPI. For those that do not know, there's CPI and then there's core CPI. Core CPI is all items less food and energy. So you're going to see all these line items that we track here on the CPI report. The core CPI does not deal with this area right here, energy and food. It does not deal with that. It just deals with this section right here. So this is core CPI. This is overall CPI. The Federal Reserve has a really big focus with with core CPI because based off of their interest rate cuts or hikes really influences core CPI, not as much as overall CPI. Okay. So all items rose 3% for the last 12 months ending in January, after a 2.9% increase in the last 12 months ending in December. So all you have to understand about this is that our current overall rate of inflation is 3%. Our current overall core rate of inflation is 3.3%. So if someone were to ask you, okay, well, what's our current inflation report? It's 3%. It was expected to stay at 2.9%, but it came in at 3%, which is higher than what was expected. And that's why the markets dropped. Make sense? Core CPI. Well, it was expected to come in at 3.1%, right? We can see that right here. Core CPI had an expectation of 3.1%, but it came in at 3.3%. So again, it came in higher than what was originally expected. So again, this is why markets dropped. So as you can see, this is the month that we added for the month of January, and this is the month that we took away, the month of January. So all it really is taken into consideration is the last 12 months. It adds it here for you so you can kind of just see what is being taken away, that is a 0.3% increase, and then what is being added, a 0.5% increase. So if we look at the overall CPI, we could see that overall CPI had an expectation to increase by 0.3%. So if we only increased by 0.3% and took away 0.3%, this is why the market expected that our rate of inflation would see pretty much no change. But because we increased and then removed a smaller rate of inflation, that is why we saw an increase of our overall CPI. What this item is pretty much just tracking overall CPI. That's this dot graph right here, the blue one. And then this dot graph, this like purplish one or burgundy, whatever you want to call it, is core CPI. Core CPI is rising again. Overall CPI has been rising since September. So this is just a more visually appealing way for you to be able to see, is inflation going up or down, and for how long it's been going up or down. So very quickly, without even looking at the numbers, I'm more of a visual guy, I could quickly see that we bottomed for core CPI right around July of 2024, meaning that we have not made any progress on lower inflation for core CPI since July of 2024. Now we're actually going back to where we've been at before, which is right around 3.3%. For overall CPI, we bottomed in the month of September, and some people would be quite surprised, but since September, we've been seeing a steady increase in our inflation rate. Again, supporting the case that inflation is no longer going down, inflation is actually going up, something to take into consideration, okay? And then these are the line items, okay? So you guys ready for this? This is this is super simple to understand. I just want to make sure that you guys can see the items, okay? This might look overwhelming. It's not at all, okay? Let me know when you guys are ready. What's MSTR doing? Don't get me too excited. Where's MSTR at? Oh, 314. Would you look at them apples? Sold off 4.5% yesterday, and it's down an additional 1.6%. It wouldn't be a live trading session or a live session if we weren't talking shit on MSTR. Look at this worthless, overhyped up piece of shit company that has lost over 40% of its value in about 3 months, right? Would you like to see, look at that. Look at that. PLTR also tanked. PLTR down 2%, finally. But be careful with this thing. This thing is strong. Very different than MSTR, right? Both are very hyped up. I think we could all agree on that. MSTR was very hyped up. PLTR is very hyped up. But PLTR is actually a very well-ran company. They're very cash rich with over $5.2 billion and no debt. Their business is actually growing. MSTR has no business. Their big news when they reported earnings was that they changed their name and they changed the color of their logo. No one cares, right? It just is to show how pathetic this company truly is. There's a reason it's dropped 41% in 50 days. All right, let's get back to it. Sorry, got too excited talking about MSTR. All right, ready? So when we are tracking inflation, or when the Bureau of Labor Statistics is tracking inflation, they look at these line items. So they look at food, food at home, food away from home, energy commodities, gasoline. And then every single month, this is July, August, September, October, November, December, and we just added January. This is what was just reported. So pretty much what it's tracking is from December to January, did food increase or decrease? Okay, it saw a 0.4% increase. Okay, what about food at home? From December to January, we saw a 0.5% increase. Okay, so energy then saw a 0.2% increase, and then energy is normally the area where we see the biggest increase often. So you can see that, let me double check. Yeah, energy saw a 1.1% increase. Then we saw energy commodities at a 1.9% increase for the month of January. Then we saw a 1.8% increase. That was for gasoline. Then for fuel oil, look at that. Fuel oil, a 6.2% increase. That's the biggest increase that I have seen in quite some time. This is probably why our overall inflation rate came in so high. Fuel oil saw the biggest increase of 6.2%. And then we see energy services, 0.3% increase. We see electricity, no change. And then we see utility piped gas services, a 1.8% increase. So far for these areas, right, for this area right here, the biggest increase was 6.2%. Now for all items less food and energy, remember this is core CPI. So none of this energy or food is taken into consideration for overall CPI. For core CPI, it's just this section right here. So that's like commodities, less food and energy, which again, this one saw an increase of 0.3%. Then we saw no change on new vehicles. On used vehicles, we saw a 2.2% increase. Look at this. On apparel, we saw a 1.4% decrease. I think they saw a 1.4% decrease on apparel because, check this out, Shop Tech got seen at 20%. No, just kidding. But I'm not joking. We do have a killer 20% off if you guys want to buy any wall art, day trader hoodie, Wall Street hoodie, Nancy Pelosi hoodie. It's $30. You can't go wrong with this. Look at that. You're telling me with a Nancy Pelosi tee for 25 smackaroonies, you don't want that? A Warren Buffett, buy the effing dip? What about the Elon Musk, go F yourself? $35, and that's before the discount. So you guys can use promo code NEW20 and it will get you an additional 20% off if it's your first order. So look at that. All that, mouse pads as well, day trader mouse pad, Wall Street mouse pad. You know your trading setup is looking weak. You know it's looking boring. So if you guys need to pimp it out, use promo code NEW20 and it will get you 20% off your entire order. And again, that's all at shoptechbuds.com. All right. Going back to that CPI report, apparel saw a decrease of negative 1.4%. We saw medical care commodities saw an increase of 1.2%. And then services, lost energy services saw an increase of 0.5, shelter 0.4, transportation services 1.8, and then no change on medical care services. And then it summarizes all of this that for all items less food and energy, I believe we saw, a 0.4% increase, and then all items, a 0.5% increase. So overall, this is how we come up with a 3% overall rate of inflation and 3.3% of core rate of inflation. So 3.3, that's where you find the core. 3%, that's overall. And again, if we go back to the report, that's exactly what was reported. 3% all items, 3.3% core. Okay? Pretty simple, right? I mean, it's a lot to take in, right? Because there's obviously like a lot of information. But it's very simple once you kind of like break it down and make sense of each area. This is just tracking month over month. You know, hey, did inflation go up or down? There was no change on May, no change on June. And then we started seeing a steady increase, right? Started a steady increase of inflation. So even when inflation technically is going down, it's not that there was no inflation on the newest month. It just means based off of how inflation is calculated, because we take away the old month and we add the new month. This is one thing that I want to highlight, right? What happens, and I'm serious, so you guys need to pay attention to this for those that actually understand how the inflation report works. So every month we're adding a new rate of inflation and then we're taking away an old one. Inflation's already at 3% for overall CPI, right? What happens when we get to May and June of this year? Because then at that point, last year and what's contributing to the formula is nothing. So that means that May and June of this year, if we add anything to our inflation rate based off of how things are going, inflation has been going up, right? And if we add and continue to add more to our inflation month over month, and then we take away nothing, right? What do you think is going to happen to our inflation rate? Just like everyone likes to say, Bitcoin to the moon, right? Inflation to the moon. Because of how our inflation rate is calculated, we take away the old months and we add the new months. So once we get to May and June of this year, don't be surprised if we see a sudden gap up, a big jump for our rate of inflation. Because if inflation continues to climb the way that it is and what it's contributing to the way CPI is calculated, by the time that we get to May and June, because nothing was added last year or is contributing for those months, anything being added would be more than what is already being contributed. Does that make sense? So again, don't be surprised. This is where you can kind of come up with forecast or expectation for up and coming months. So if people were to ask you, hey, do you think that inflation is going to start to go down now that we're at 3%? I would be like, no, Timothy, right? No. Well, based off of what we know that is already contributed to this data, we're only probably going to see, maybe for the next 2 to 3 months, we might stay around 3%. But for the month of May and June, because they contributed nothing last year, this year, if anything is added to our rate of inflation, boom, we increase. Okay? No, Timothy. Isn't it kind of fun when you humanize this? No? Isn't it kind of cool? It makes it a little bit easier to digest, a little bit easier to understand. Is it just me? Was there nothing added in those months last year? That is correct. That means that when inflation was calculated, for that given month from those line items, from what was added or saw an increase and what saw a decrease, for those months, there was no change. That is correct. You still think NASDAQ is overbought? I don't think NASDAQ is cheap. I think NASDAQ, even after this, let me make this clear. Do I think NASDAQ is oversold? Is that what you mean? What do you mean overbought? Do you mean oversold? Because NASDAQ sold off, it's down 1%. Do I think that by the time the market opens in the next 40 minutes, that NASDAQ can begin to recover? Yeah, I do, because NASDAQ has been finding any excuse to go up. Do I think that it should? No, but guess what? It doesn't matter about my opinion of what I think, or no one cares about your opinion. No one cares about mine. Or what I mean by no one is the Wall Street market does not care, right? Can markets begin to recover? Of course. Markets have been incredibly bullish. They've been finding every reason on why to recover. You always have to be your own devil's advocate. You can't sell yourself the dream of, no, this thing has to sell off. This was a bad report. If everything had to make sense on why it happened, then Wall Street would make sense. The stock market would make sense. But there's a lot of times, more often than not, that things don't make sense. And it's just the world we live in. So I wouldn't be surprised if markets naturally and magically begin to recover. Now, do I think that they need to? No, not at all, right? There's a lot of downside potential to lows of around 500, 510 per share for QQQ, which means that there's pretty decent downside. This is QQQ, which is the NASDAQ ETF. So do I think it's cheap enough that it could begin to recover? Of course, because markets are so bullish and it's found a support here before. But if we break below this, do I think that there's gap down potential? Of course, right? We've talked about it before, the 530 resistance and the 500 support range. We've talked about it for a number of days if you're part of my LPP team. So Tesla going up or down? What do you think? I hope Tesla continues to crash. I've had a number of people that have messaged me like, oh my God, Ricky, like, why is this happening? This is not fair. Really? When I was making videos about Tesla being overbought at $400 to $500, everyone was so quick to laugh. Everyone was like, Ricky, you're just hating because you didn't get in. Well, no, Tesla never should have been $1 trillion company. Tesla was trading at $200 per share during its robo-taxi event. It reported earnings, and earnings weren't even that bad, and Tesla was still selling off. No one cared about it until magically Elon became a part of the Trump administration and Trump was announced to potentially win. And then all of a sudden, everyone loves Elon. Everyone loves Tesla. And again, if you just zoom out, you can see how volatile Tesla has been in the past. This is not anything Tesla is new to. If you're familiar with the way Tesla trades, you are not surprised. There's strong rallies and there's strong crashes. There's strong rallies and there's strong crashes. I think Tesla can go back all the way down to 200, maybe even sub $200 per share. I truly do believe that. Tesla is not looking good right now. Fundamentally, again, you can hype up a stock just like MSTR. I have to throw it under the bus. You can hype up a stock as much as you want, but when the truth comes out, it doesn't matter, right? Tesla reported worse than expected earnings. Its guidance for 2025 was not the best, and sales are down year over year. Right now, it has a competitor named BYD. I think it's a Chinese competitor, and in European countries, it's exceeding Tesla in sales. So again, it's like, this is why we talk about when things are overbought. Not because we're here to try to predict the future, because we can't. But the whole point of when we talk about these overbought levels is simply so when moments like this happen and there's 40% corrections on a stock and it's just getting started, you are not surprised, right? You are not caught off guard. So it's not that you had to sell your entire Tesla position up here because no one knew exactly how high it was going to go, but that maybe you trim off the top, you take some profits. So if Tesla does pull on back like it is now, you expected it and you're able to buy more. But again, If you decided to jump into the hype with everyone else and now you're bag holding, that's the position that you decided to put yourself in. That's no one else's fault but yourself, right? Kind of like SMCI. SMCI is the new bullshit company that's starting. It was supposed to report earnings yesterday, and it delayed its filing again until February 25th. And I looked up and I looked into SMCI even a little bit more, and people on Twitter are so, and it's crazy because at one point, we live streamed this. At one point, this thing was down 20% to lows of $31. And then now it's shot up to highs of $44. And the only reason it's down to lows of 42 is because of the CPI data report. This thing was booming. It was like up 13 or 14% for no reason, but because its guidance, according to their CEO, is good. Think about this. This company is expected to report earnings every single quarter. For 2 quarters in a row, this company has failed to report earnings. They've been removed from the NASDAQ. They've been almost removed from the NASDAQ as a whole. They got a delisting notice for not meeting NASDAQ requirements. And then on top of that, they were found for, or they were investigated for potential accounting fraud. There's a reason why this company has been going from $122 per share down to lows of $16 or $18. It's a terribly ran company. Now, is it a terrible business? No, not necessarily. I'm not here to say that. I'm saying the way that it's ran. It's so unfortunate that a company that does have a lot of potential is being ran so poorly. But again, we shall see, right? We'll see how it continues to trade. What's going on? Powell needs to get out. He needs to quit. Old man. Why? Powell, I think, does a great job. I don't get why people don't like Powell. Is it because he doesn't cut interest rates as much as people want? It's not his job. His job is to cut interest rates when data supports it, not just because he wants to or not just because the president wants to. The Federal Reserve is not supposed to listen to what the president wants. They're supposed to decide. They're an independent institution. So if that doesn't make sense to you, then educate yourself. Let's see. Irvin, you sound salty. Are you talking about my breakdown on SMCI or my breakdown on MSTR? It might sound salty to you. I'm sure I sounded salty when I talked about Tesla at $400 per share, right? Everyone always says the same thing, right? Everyone always says, oh, this is how you sound. Well, how do I sound now, buddy? Now that Tesla's down 31%. How do I sound now? Right? We talked about MSTR when it was at $500 per share. Now it's trading at $317. How do I sound now? Even with SMCI. I talked about SMCI when it was trading at $120 per share. That was before its stock split. But nonetheless, it was trading at like $1,200 per share. And I made numerous videos talking about it. It's a bullshit AI company, overhyped up. Ever since then, again, if you just perform a quick fundamental analysis and you see how bad the company's being ran, it's not about being salty. It's kind of like almost just having a brain to think for yourself, right? I know that might be hard, Irvin, but it's good to be your own person. And it's good to share ideas. It's not that these ideas that I speak into existence are always right or are always correct. I think Palantir is incredibly overhyped up. I think it's incredibly overvalued. I've shorted Palantir stock and I've gotten smoked twice. Yesterday, I was able to take a decent profit from it, but I've been wrong before. And I accept my wrong. You cannot have an open conversation with thousands of people and expect to be right every single time. But it's at least having these open and constructive conversations with one another that I think are very important. Sharing ideas. If you like SMCI and you want to share why, share it. But calling me ignorant because I call bullshit because it looks like bullshit and it smells like bullshit, then again, that's just your own bad. I guess time will tell, right? Very simple. It's crazy how easily offended people get I'm not talking about you when I talk about this company. I'm talking about, I don't care that you have 100 shares or 1,000 shares of this company. You're still insignificant to this company, right? And if you're down on this stock because of how consistently bearish it's been for the past year, then again, that's your own fault. That's not my fault. Maybe you shouldn't be watching videos. Maybe you should focus a little bit more on proper risk management, right? Something that we can all work on. Easy peasy. Make sense? And look at that. Whoa, crazy. Crazy. We've dropped 5.5%. QQQ down 1.2%. And let me make this very clear. Do I think everyone should be shorting? Heck no, right? Everyone's not designed to short. It takes great risk management, great accountability, and it could quickly turn against you. I mean, I've seen it happen with myself, right? If you're just a little bit off, it can quickly turn against you. So the thing that I want to share with you is that if what you're seeing right now is the market selling off and it's kind of scaring you because of how, this shouldn't scare you, big picture. Even if the market does sell off a little bit more, this should truly excite you, because even if you are an investor and you're trying to go long, this is when deals present themselves. And I'm trying to think about both sides. So I want to be open-minded. So if we do see a pullback, be excited, because that means that you get to buy at these lower levels. The only people that should be freaking out right now are those that are bag holding. Those that are in with every penny of their account and they have no more money to buy during a pullback. But that's their own fault, right? If they're bag holding because of poor risk management, they don't know how to close out their trade, then that's the position that they headed, and you have cash on the side ready to invest, then this should excite you. Because if markets do continue to pull on back based off of previous support levels, there's huge upside potential. And that is very exciting. So again, even though I'm excited to short these stocks, doesn't mean that you need to. I always like to talk about both sides and both-sided opportunities. And there's huge opportunity to be able to buy into these dips and make money on the recovery. Because again, when NASDAQ market dips, they all dip. But then that means that when NASDAQ begins to recover, a lot of them begin to recover. And that is extremely exciting. Okay? All right. Capiche? I enjoyed this session with you. I was actually thinking of not going live today, but I'm really glad that I did. So thank you guys again for tuning on into our CPI data report. For those that just tuned on in, CPI came in at 3% for overall CPI. Core CPI came in at 3.3%, supporting the case that inflation is going up more than what was expected. So that is why markets are dropping. We're about to go live for our LPP live trading session. So if you want to tune on in, you guys are more than welcome to join us. So again, that's going to be that second link in the description. Oh, did the video end? Is video done? Can you guys hear me or see me? I think the video might be done. Well, just in case you could see me, second link in the description down below is so you can watch me trade live. So whenever it is that you are ready, second link down below, and I'll be going live right at market open. So that's in 26 minutes. Remember, it's a one-time payment, lifetime access, and you'll get to watch me trade live every single day. I hope that it earned a thumbs up. Please consider subscribing. And like always, let's make sure that we end the year on a green note. Take care.